All right, here is Friday, December 22nd. This is a perfect example on, once again, a lot of the rules, just to sort of reiterate. It's the hardest thing to have patience. The market, it usually, it never wants to do what you want it to do in your time frame. Um, but it has a tendency to want to give crumbs, letting you know what its intentions. So, really, what I focus on are levels, technical analysis, and price action. Um, when I say price action, it's how is the movement between levels, and what time period. Um, Once you can sort of put all that together, then you can pretty much master this. And you have to be just very aware of your multi-day pivots and intraday pivots. So let's go into it, and I'll sort of show you what I mean of putting it all together, because yeah, it can get really frustrating, and that's why sizing is really key. Because if you're wrong, you're wrong, just and you get stopped out by a little bit. But when you're right by a lot. Um, so it just depends on the strategy you want to have. I mean, day in and day out, the market's going to provide you something different. And if you go crazy and you start sizing crazily, or having that what if, like, oh, what if I had 5 contracts or 10 contracts, um, the name of the game is just being able to consistently, get in and get out of the market and be profitable, and know what you're doing. So let's get into it. So first and foremost, the market actually in pre-market came and was down here by the bear pivot. Then by about 6:30, actually it was 7:30 that it broke above yesterday's high, and then it came all the way up here at pre-market, or when we opened up right here. So a lot of times at open, that's sort of an important area for you to like draw a line. So a lot of times what I do intraday is have specific lines drawn to sort of give you a sense of what's happening, and give you a good support and resistance, along with your pivots. Pivots are the most important things, but intraday support and resistance are also key. So, and I'll show you why. So here you draw this line. So now what do you do? You know, you could see that the first 5 minutes right here, this is where it came up, and then they dropped it back below. So they opened here, they shot it up here, then they dropped it back down within 5 minutes. That right there, when that closed, it tells me that, at least for right now, we need to we need to be bearish. You're under VWAP, you're underneath this. So what do? You end up shorting. So right here, I ended up shorting right here and expecting it to come down, maybe fill the gap. What does it do? Goes up, comes back down, comes back up, and then 5-10 minutes later, they end up shooting it up all the way back up to this fib area. It's a fib intraday, but also fib on a multi-day, right? So okay, I get stopped out. So be it. I ended up then looking for the short again right here. I missed this long. I didn't flip because, be honest with you, I was sort of short biased in the morning. It was just getting a good entry. Like, I didn't know if they were gonna short it here or if they were gonna short it here. But either way, I was not long biased, just because every one we opened up right here. So we opened up way above this multi-day pivot. So this was going to be the next resistance. Sure enough, that was the resistance. Not just that, as you see previous in the week, see how the market was reacting. These are 30-minute candles on the left with 4-hour overlay candles. So you see how it came up, came back down, came up, came back down. But you see how the candles were closing, and then they broke it. So that's super important later on in the week, if it ends up coming back there. So sure enough, what does it do? it comes back up here. So you short it. So you short it from here, and your target is to down here, and really you want it to break. But just like with any rules, you know, we broke out. We broke out of this the bull pivot. So you have to be long bias at that point, you know. But it's sort of hard to be long biased when you have this major resistance right here, right? So that's the reason why for basically about an hour or so, we were in this chop of a 30-point range. Up and then down, and then up and then down, and then up and then down, you know. And so you have to really trust those pivots that when it came back down, you know, that unless it breaks through and holds. See, even right here, it wasn't breaking and holding on that 5 minute. So you have to be cognizant of where you're on your time. At least for me on a 5 minute candle. 5 minute candles are key for me on how I trade. 1 minute doesn't matter. 15 minute doesn't matter. It's too long of a time or too short of a time. 5 minutes has been perfect. And you can see how these wicks, you know, this was consolidating, you know, which is good. Then you just need to know to sit back and do not try to chase. Like, you either have to go in short here and hope that it's going to come back down, but you know that if it ends up breaking above, well, where's your next target? Well, your next target is the week high, which is right here. Well, the week high was actually right over here at 1770, but this is where it closed, right? See the 4 hour candles? So that would have been my next target. Do I really want to play that? There's not enough meat in the bones. To me, there's more meat to the downside. So what ends up happening was eventually you could see that it came down. You have these candles closing below VWAP. They scooped it back up. They consolidated again, but they could not get it over. That right there should tell you that this is really weak. So you want to get in as close as you can to this pivot and hold for the bigger picture. So when it comes to technical analysis, when you start seeing a pattern, draw a line. I do it automatically because it really helps. Visualize. So here you go. Look, you had a full candle up. You had support, and then the candle shoots up. So now you have this sort of consolidation pattern. See right here? Sort of consolidating. So that tells you that if this breaks, then then it's going to pick its direction, right? And what's even better is, look, you are above a pivot. If you consolidate above a pivot and then you break back below that pivot, you better believe that's going to be resistance for the rest of the day. Because not just that you have, it's proven that this is resistance because of the breakdown, but you also have that pivot to help with that. So the second thing, if something was to break down, you see how the candle was solid and it ended? This is the other thing you have to really take notes. And I would take notes of some of the stuff I'm saying, even though I might be really wordy. But it's the last 5 minutes of the 30-minute candle. You will notice that time and time again, a lot of big moves happen at that last 5 minutes of that candle. So look, you can see that this right here, this was at 9:55. So 9:30, we still haven't made new highs, but we also aren't below. But so you have to wait till that next TPO to see. Well, I wanted it to prove if this 30-minute candle broke back below this pivot and it held, then it was going to be resistance for the rest of the afternoon. And so 10 o'clock, so 9:55, you had that candle that shoots all the way down. And what does it do? It closes right at the opening at that 9:05. So it doesn't give you a lot of time to get in. You because immediately from there it ended up dropping another 20-30 points, and then they scooped it up, right? So you have to be anticipating these moves, as in, again, the best risk reward of not chasing would have been shorting right here, anticipating the breakdown, right? But if you were late, then when this started breaking down, one, it should never have broken down right here back below VWAP. So once it broke down, you just have to get in right here and go short and play by the rules and hope that it doesn't come back up just like this. You see how it came down and came back up and then stopped you out and came back up. This time, you have to sort of believe that's the breakdown, right? Again, it's not the easiest play, but you want to wait until this candle the easiest play to play is waiting for that candle to actually close. Because if that closes, then it tells you that is now not a fake out play. So then you could have got in right here and risked to up here, which, yes, it would have been about 10, 15 points, but that would have been your play, and you're anticipating for it to break down even more. So anyways, back to looking at really the low is, there you go, the low is right here. Yep, that's it. Yeah, I'm sorry. The low was right here. That's why it dipped, and it dipped again, and they scooped it up. So moving forward, you could see that they dipped it, and they basically were closing it back above this line. That's pretty bullish. Well, I say that's not bullish. What it is you're trapped again. Now you're between a resistance and support. So what do they end up doing? They ended up dropping it again and then pulling it back up. So they did that twice. At that point, that's when you should sort of just calm down a little bit. Don't get you just got to stick to the rules. You don't want to go short, but you don't want to go long, because then you can get really chopped up. Which, sure enough, you can see for about an hour it chopped you up. But right here, you can see that it came back up to the pivot and then rejected. So we have this consolidation. Ooh, sorry. And if you look to the left, you see how what it's doing? You have a star or a shooting star right here, and then you have a close above that line. You have a doji right here. Then you have a push up. So let's get back to the technical analysis again. So from here, the technical analysis, anytime you have a breakout, I always put a line. You never know if you'll need it again. Trust me. You never know if you need it later on in the day. But anytime you have a breakdown, here's where we broke down. You can see this 5-minute candle is where the break. Put a line there. Okay? So what ends up happening? They come all the way down, and they didn't make it down and fill that gap. They scooped it up. So you should be taking profit along the way and then moving your stop, right? And you would have got stopped out. No big deal. You move on to the next play. So now that I see that they're scooping this up, even right here, this was at 10:30. 10:30, they opened up below here. They came up about 5 points and then rejected and came back down. The next 5 minutes, then they shot it back down here. So this was a failed breakout. And then they came back down. See, the 5-minute candle did not close. And that was the very beginning of that 10:30. And what is the rule? 10:30, are you above or below? Okay? 10:30, 9:30, all those 1 hour marks, or 12 o'clock, 12:30. But you see that at 10:30, there's a reason why I always keep saying 10:30. Well, look what ends up happening. European closes. There's not enough momentum to get it back up the rest of the morning over this pivot. So this was going to be your resistance. It was support in the morning. Now the rest of the morning, it's now resistance. So the only best risk reward area is as close to that pivot and shorting it until proven otherwise. And proving otherwise means it goes back above and it holds. You have a closing candle. So what does it do? 10 minutes, drops back down. And it's struggling again, struggling. Right here, what do they end up doing? at 11 o'clock, or it was 11:05, they shot it up, came all the way up, back up to the pivot, and then look what they ended up doing. They shot it up, and then they yanked it hard. That's why you have this wick. So they yanked it hard. So if you would have been chasing right here, chasing, thinking it was going to go down, what did they do? They stopped everybody out. The best risk reward was right here, having a 5 to 10 point stop, and then just letting it play out. So here's the caveat to this. In reality, your stop should not be above here. Your stop should be above here, because that is how these moves are made. That whether it's institutions, algos, or whatever, but they put their stops where these breakouts are. So that's why whenever you see something break back through this, that's what is called a squeeze, where things start squeezing because these are stops being triggered. So let's go back to the rest of the morning. It was just struggling. Came back up. This should have kept on going and going and going quick, but it never did. It found support right at that line. So in reality, after those candles were rejecting, I actually probably would want to put a line right there, right? Just as a visual reference for future guides. So like right here, if I was shorting, where would I want to take profit? Probably want to take profit right here. And then be honest with you, my idea was I wanted them to reverse later on in the afternoon. I was thinking that they were going to actually reverse and go back up to the highs again, and then finish off the day up there. It's the last day of the week, big holiday. Figure they're just going to do that. But you never know what the market's going to do. So let's take a look. You see that we went up, came down. We went up, rejected that 5-minute candle, could not close, comes back down. You see what it's doing? If you did not see this candle, you would have drawn a line from here down to here. And you see how these candles were closing? Came right up here. So it came down, rejected, came back up. Once it broke above and out of this, it tried to come back down, and this 5-minute candle was this little doji. And then what did they do? They ended up shooting it up, and this was right at the 11:30 candle at the beginning. They came down and then came back up all the way to the pivot. So this right here, if you look at this, what does this tell you? This tells you, that's why I like drawing these lines. It tells you that now this is bullish. So when something's bullish, something has to do something. If it doesn't do that, then you have the alternative to that. So it breaking out of this, it needs to break above that 17,020 area, right? It needs to break out of that. If it doesn't, then it has to break back down. And then it has to break back down. It has to come back down to this 990 area, right? And if it breaks below the 990, then what do you think it's going to do? It's going to squeeze, because it's going to stop all those people that or all those algos that were using this area of the breakout as a stop. So what it ends up happening is the morning is done. Once the morning is done, the 12 o'clock, well, really it's the 12:30 candle, then you have an afternoon play, and you have to sort of compartmentalize. So now you have all this data right here. That's why it's super important to draw this out, because this is sort of telling you what's going on. And you see how these 30-minute candles are closing above this line. So now you want to know this 990 area is going to be an important part of the day. So I'm just going to go ahead and fast forward and show you what ended up happening. So you see how at 12 o'clock you were above the pivot. So now it's support until proven otherwise. And remember, if it, just like this right here, this was a fake breakout. Well, this wasn't as much of a fake breakout, because you broke out, you consolidated, and then you broke back down. Usually a fake breakout reversal is where you have one candle above and then the next 30-minute candle below. Then that's a fake breakout reversal. Um, just a faker is where the 5-minute candle comes up and then comes back down. So look at this right here. So for at 12:30, you ended up coming up and tagging the breakdown. It tried to get across, but it kept on rejecting. So it needed to go above and just started squeezing, right? But it didn't. So what does that tell you? Now you're once again you're stuck in between two important areas, as in you either have to go above and squeeze, or you failed breakout and then now you reverse. Or a lot of times what I've seen is it just chops for the rest of the day right in this range. But at the end of the day, that's why you set alerts and you don't get caught up in the minutia of these points. So what ends up happening? Look at this. You end up breaking down, candle close, and then the next candle right at 1 o'clock, they came back up, retested, and then immediately they just started unloading because failed breakout reversal. So here they go, that first 5 minutes. What do? They broke that breakout. So what does it do? The next 5 minutes, they break it down again. And literally with that next 5 minutes, they dropped it all the way down to the pivot. And they should have done that. So here's what I mean by the market. The market wants to do what it wants to do in its own time. But you have to just trust in the levels. The mere fact that we consolidated above this pivot, and then now we had this hard break and close below, this should never come back up, period. Like you 95% of the time it will not. And if it does, you better load the boat because you're going to have a massive squeeze. So what does it do? It didn't do it in the morning period. It ended up waiting for the afternoon period. So the people that were probably waiting for this drop right here, it never happened. But look what it ended up doing. It did exactly what it was supposed to do. It basically was a box day in a way. This was a box play. Well, it's somewhat of a box play. But you broke down, you consolidated underneath, you broke out a little bit, and then here you had a full 100-point move from pivot to pivot. And so within this 30-minute candle, you had a 100-point move, and then right at the next TPO, which was at 1:30, they came down, they broke below, and then this was a fake breakdown, and then they came back up. So that's the reason why, you don't want to assume they're gonna play the game twice where they do this again in the afternoon. That would have been really unlikely, just because of the amount of. I mean, I guess they could have done that, but the only way they would have done that is this first candle. If that first candle would have closed, that first 5 minute closed underneath here, then absolutely there was a possibility where they could have gone all the way down to this mid-level ATR, right? But because they didn't, that's why that first 5 minutes is super critical to wait and see. Is they actually shot? I don't know where. Let's see. I'm not able to see this what this candle actually looks like, but I bet it ended up shooting down, then up, then came back down, and you see how this next candle sort of opened down here. So really you would have got in, you want to get in as close as you can to the support and then risk to below here. And then what did it end up doing? It ended up shooting about 50 points in about 10 minutes. And then look what ended up happening. I mean they to the T played it in the lines that we drew this morning. Like, this wasn't made up. These are lines that are drawn based upon looking at how the candles are closing. So look what ends up happening in the afternoon. You end up using that as a point of reference. So this came up to VWAP. It could not break above, so they shot it down. Then they consolidated it, brought it back up, basically a double top. Then they shot it back down, and they came all the way back down to this pivot and then scooped it back up the last 15 minutes of the day. So, but to be honest with you, if you didn't catch this move or even this move, then you should just walk away, because the rest of the time you're gonna be thinking that there's gonna be more of this. In reality, this candle should not have closed, because look back over here to the left. This was a retest of that breakout on a bigger time frame, but look, it recovered. So you see this 4-hour candle, look how it closed. It closed with a big wick up above this pivot. So next week, who knows what might end up happening? They might end up actually coming back up, but now I know that the 1720 is going to be resistance. But if they end up breaking back below this 950 area, then yeah, you better believe it. Then now you're going to be start playing in this zone right here. So, but until then, you have to assume that now we're still bullish. If they would have closed underneath here, then yeah, I would have been more bearish. But because they recovered it, we covered it from the morning low. See, look, this was the morning's low. They just recovered it and they closed it at the morning low. So anyways, I know that's a lot of information in this video, but this was pure technical. And if you just sort of trust in the process, I mean, reality, if you would have just took it from here to here, that would have been good enough, right? That would have been good enough. 50 points. Then reversed your play, and look, you would have got probably another 20 points right here. You know, that's why you also want to like take profits or move your stop. But the moment that you see that this broke back down, this is when you get in, and you see it probably broke back down, and then this wick back up and came back up. And that's why you want to get in as close as you can, because you would have had another opportunity of the next TPO, the next 5-minute candle. So once this came back up, this next 5-minute candle started again right at the level, and then that 5 minutes, in 5 minutes it went 50 points, and then came back up, and then came back down, came back up, then came back down, then came back up. So that is what happens when you start breaking down the technical analysis of these patterns. Breaking that breakout triggered all this. If this would have broke above this breakdown, it would have triggered the upside. And honestly, you probably would have had a squeeze all the way to the high, which would have been the 60 and possibly to the mid-range. You know, this would have been the afternoon play. But because it was so slow right here, this is when you start putting on your thinking hat and start imagining the downside. So it's really tough in the actual move, because I actually got in the short right here. See this candle? And then they scooped it up. And so when that happens, it sort of fakes you out mentally, and then you think, oh, they're gonna keep going. But look what ended up happening. You had the last 10 minutes of that candle, they came back down, and then the 5 minutes they came back down. So that's why I really, really love the last 5-minute candles, because it'll tell you a lot about what's about to go on. Like, even look at this candle right here. This 5-minute candle shot up above. And then let's see, let's look for another 5-minute candle. Here's a 5-minute candle, came back up, that's not really a good example, but this 5-minute candle came right into resistance, right? These are really good candles to get in short when you get right into resistance and it ends, because a lot of times they'll reverse it. So anyways, that is the lesson today. A lot going on, but see, there's plenty of time to make decisions. You just have to get in, give yourself plenty of room, and then walk away. Other than that, I mean, like I said, hindsight looks easy, but because you're seeing what it actually did. But that's why in the moment you trust the levels. You get in right here, you walk away, and I mean, really, you could have put a timer on for 10 minutes, you know, and after 10 minutes, if it didn't make a move that you wanted to, get out. And look what it ended up doing. 5-10 minutes, you could have got out and been done. So, all right, good luck.